Hey guys and gals, this is Blake. Sorry, I was running just a minute late. My stomach is not feeling so great this morning. So, and it's Monday on top of that. But sorry about that. Hold on one second, just letting everybody know that we're starting here in the chat room. How's everybody? Did everybody have a good weekend? Anybody do anything exciting? I was tournament weekend this weekend for my son's soccer. So that's what I was doing all weekend. Literally, put it this way. I put $60 in our gas tank on I put $60 in our gas tank on Friday afternoon and filled the tank and ran out the tank back to zero to empty again. Isn't that crazy? That's how much driving I did. I probably put 300 miles around town this weekend, driving around to soccer tournaments. So anyway, let's go. Busy. Okay. Like I said, sorry, my stomach is doing somersaults this morning. So, and it's not used to doing gymnastics. Alex had asked how many miles, 300 miles, about 300 miles, about 280 miles this weekend from Friday afternoon to yesterday. Yeah, it's about right. Yeah, our gas isn't as expensive as yours, but our vehicles, and that's, our vehicles have higher or bigger engines, right? So anyway, that's the difference. Okay, so let's get, I was just looking at the US dollar CNH, how we, fell to the diamond support, bounced. Pretty important support here for the US dollar CNH. I was just looking at it because it was referenced that it was moving a little bit lower today. I'm like, huh. Or the CNH was a little stronger today, but it's really just still holding that apex. But let's talk about the dollar. First of all, the dollar is strong and it continues to be strong. All right, and that's something that we have to keep in mind. I am going to stay with the idea that as long as the euro trades below 116.50, it's bearish. But right now, it's can't even get back above 116. So, first level resistance is obviously right here, 116. But after that is 116.50, which is the trend line and the breakdown point. So, and 116.50 is obviously key resistance, and we're going to stay bearish while we're below that. All right. Support. Now, this is the same as yesterday. So I just want you guys keep last week. Sorry. I want you to still keep in mind that this is still flagging any which way you look at it. Right. So if you break below now 115.50, if you break below 115.50, that is a bearish event. Okay. So let's remove that. Right now, the big confluence of support comes in right here at 115. Obviously, it's the 161% extension of that last move higher, right? And it is also the 50% retracement of the post-COVID move. This COVID lockdown rally high, 50% retracement. So that all comes in at, let's just say, roughly 115. I'm pretty sure those are the same numbers we wrote down last week. I wrote down 1505, 1575, 1640. So, now we're just really more focused on not even being able to get back above 116 And then obviously this trend line here is 116.50, right? Support 115. We're just calling it in the middle of those levels, right? Okay. All right, let's continue on. Sterling. And by the way, it's Columbus Day in the US. So we're missing a few people from the US that are not here today. Obviously, people are taking today off, 3-day weekend, long weekend. I know people that have that are out of town. It's going to be, it's just kind of the way it is right now. So, all right. 136.60 still remains resistance. The high today was 136.73. I think we were writing down 65. Whoops. We wrote 60. So probably just write 63 is the 50% retracement. We'll just write 136. Oops. Since that stays high, while we hold that, you have to remember it's still a bearish trend. And support 135.40. $50. Aussie. So we have that inverted head and shoulder pattern trying to play out. 618 retracements, the next level up, which comes and by the way, I'm as you guys know, I'm still not a big believer of this this inverted head and shoulder pattern, but it is there, and it is trying to play out. So we have to respect it for now. 73.60 is the next level of resistance. After that will be 74.10. And we've been in range, and we're going to keep it in range. Support right now is going to be this low. These lows, as you can see here, right? These lows are now important. That comes in at 72. Let's just say roughly 72.90. Kiwi. Triangle resistance still. So that's 69.60 and support is right there, actually. You know what? I'm going to forget that. I'm going to do what we did on Friday, I think. Resistance right here at 69.85. Support is going to be 68.80. So let's see. 68.90, 69.80. So I think I was trying to stay with that trend line, but we'll write 68.80. And this will be 69.80. Okay. Oh, Rick said along with US holiday, Canada is on holiday as well. It's their Thanksgiving. Today's Thanksgiving for Canada. God, I always thought it was after ours. Or, I mean, before our Thanksgiving holiday, but like a couple weeks. Is it really right now? You guys in Canada, is it really? Oh, Raj.
It says so on investing.com, so it must be true.
Yeah. How come I always thought their Thanksgiving was a couple weeks ahead of ours, which isn't until end of November. I mean, so anyway. All right. Um, you know, I'm the worst at dates. Stelios. If thank God for like
First dates.
no, thank God for
Okay.
thank God for setting alarm, like my phone, because I don't use Facebook anymore. I stopped using Facebook years ago. I just don't, because it's too much. There's some stuff you really shouldn't know about people. You know what I mean? And so I was like, nah, I'm done with that. I did it for like 2 years, and I'm like, nope, that's it. Too much information. I do not need to know when you're pooping, and I do not need to know about, your kids' stuff, and I definitely don't need your political views. So anyway, but Facebook was great because I got everybody's birthdays.
Oh
But
yeah, it's perfect in that way.
yeah,
Perfect.
but after that, I had to go, and I now I just set up everything on my phone, so it's all on my calendar stuff. You know what I mean? That's easier way to go for me. Okay, dollar CAD. So dollar CAD, big confluence of support is going to be right here. I'm going to get through this because we actually have a meeting we have to, and Stelios has to be there too. So I'm going to get through this. 127% extension of this move right here, and 618 of the broader move comes in at 123.70. Just say roughly 123.75 because it's in between those two fib levels. 123.75. And do you think if I'm going to put bearish? I'm not. I do think the Canadians got a bid right now because of the the data that came out on Friday. Very, very strong data, and very weak. I want to say very weak, not like very weak, but if you look at overall in the dollar Canadian, I mean, we are just really just kind of sideways right now. I can't get really bearish at this point. I just think we're just bouncing around. So I think that is a good chance that we can head down here, bounce back up here, or bounce back up here and then back down. I think either one of those seem very logical to me. So first level resistance will be this previous support. That will be 120. Let's just call it 125. If we can get above 125, then we're back at 126. So, first and foremost is 125. 126, just in case we start squeezing for whatever reason. Stocks come down. I mean, you look at the dollar max. The dollar max is like at highs of the session right now. Which I still run a long dollar max, small dollar max trade. So it's fine. It's one of those things that could, illustrate that. Now, what's really interesting that the dollar yen is selling off, or excuse me, the yen is selling off, but the Swiss isn't. So, I don't know if this is really a yield move, right? So if we do, let's say, and one of the things that I made mention in the chat room is, NASDAQ should move lower if this is a yield move. If the dollar yen is moving up because its yield's moving higher, NASDAQ should go down. But then you look at the Swiss franc and you're like, yeah, I don't know. Maybe it's not a yield move. Maybe it's just a pure yen move, right? So, now if we had both dollar Swiss and dollar yen moving higher, then that's probably going to be saying the yields are going to be moving higher, right? So anyway, trendline support has held us thus far. I wouldn't get too carried away with it while we're above this the spike low here at 28 or 92.30. So, but we're threatening to move this to bearish, because we've been consolidating, right? So I don't know if I'd be short right now, but just got to watch this carefully. I'm not even trading the Swiss right now, so I'm really not paying too close of attention. But I know a lot of you are. I know a lot of people have been focused on the Euro Swiss. I've had a lot of traders Actually, some of my institutional trading friends have been, you know, asking me a lot about the Euro Swiss. I think they got caught off guard when the Euro Swiss slumped a couple percent last week. So they're like, I didn't expect that. You know, what do you see here? Those types of comments. So dollar Norway, again, big support down here, big 618, 851, resistance 865. Nothing's changed, right? Dollar Mex. I mean, I was just pointing out in the chat room, this is doing, again, this is one of those situations where you have us breaking higher out of this triangle like we did over here. So the risk is we start taking this, 2080, then the next resistance is 2089. So this is bullish while we're above 2040. Well, above here, I mean, it's bullish, and I'll have to say intraday support right now is, let's just call it 2065. But I'll do this 2040. That's key. 2065 is intraday support. Yeah. Okay. Moving right along. My Euro Mex continues to go higher. Picked that up last week right here, sold it, but man, this thing's threatening a breakout. That breaks out, I wouldn't want to be long risk. Dollar yen, big mover. A lot of the Forex Flow guys were long dollar yen this last week, so kudos to them. Really nice move. I didn't, I've told you guys, I'm very much struggling with how to trade the yen, the dollar yen specifically. And I've traded other yen pairs. I did take a loss in the Canadian yen this last week, but I've traded the other yen pairs with some pretty decent success, but the dollar yen specifically, I have not been able to get a good read on it. And, I didn't expect us to break out. I thought yields would eventually break out, but I didn't expect it to break out overnight without yields even moving. I just, I don't understand the drivers is what I'm trying to say. So technically I've just got to try to take cues here, and the channel obviously wouldn't hold or didn't. So this is not relevant, but maybe it is. And I say maybe it is because maybe it's this. Maybe I was just not calculating correctly. Maybe this is what we should be looking at. I mean, maybe, I guess, I don't know. Right. So anyway, 161% extension of this move comes in at 113.50. That's your next stopping point if we continue higher. I have to say it's bullish. I mean, it is, right? I mean, we're getting a nice break above 112.50. So as long as we stay above 112.50, you have to be bullish. And anybody trying to short the yen pairs, which by the way, I did short some Aussie yen earlier, and I'm down like 20 pips, small positions, only a third size, but it's like, I'm not going to stick around. Hell's no. This thing's moving higher, if I can get a counter trend kind of move, I'll take it. But let's see. Dollar index. Still bullish. Let me get rid of this. Let's zoom in a little bit. So I mean, however you want to look at it, I guess. That 618 held like a champ. So we have to write that down today. 93.95. And 94.50. And it's bullish, but it's really bullish. Should we break above that? Right. Okay. I'll be finished up here in just 1 second. I'm going to pass over to Steve and Stelios. Here's the S&P. Obviously we had non-farm, so let's just kind of get rid of this stuff right now. So we should be capped by we shouldn't exceed if you're a bear, we shouldn't exceed this. Aussie breaking out. Look at that. God damn Aussie. We shouldn't break 44.40. Oops, put that in the wrong spot. Wrong button. Let's see. Low, high. I mean, I think we'd get pretty lucky if we got a spike down to 4,300 today. So I think this 43.10 should probably offer this spike right here, 78% retracement right here. I think that that's going to offer a lot of support on any dip to intraday at least, right? Okay. Not sure it's going to hold. Wow. Mutual fund Monday. Stocks ripping. Okay. Gold, silver. Oh my God, nothing's happening. So weird. 23, 22. Nothing's changed, right? 22, 23. Big rejection of 1780. I think we've been writing that, right? 1780. Oops. So 1780, it is big. It was proven. These are still bearish. 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 Gold support. Even if we spike below here, you gotta be careful of everything holding down here. So I'll write down once again 1720. Bitcoin. Oh, we are. Oh almost at that channel resistance. And this is the confluence too. We were talking about 56,700. We're here. But the channel could take us all the way up to 59,000. So I know you guys want me to, but I can't in my right mind. Oh, this is bearish still. I know it's up right now. It's because it's Monday. But I don't know if I can put that as bullish. This is I just think that this 59,000 is going to cap us. So that spike low right there, support. So we're gonna have to write it down as support, and that comes in at 51. Okay, so that's it. And I think in order for me to get really bullish, like the Bitcoin, we just need to hit it to hit new highs, because I am really just kind of in the belief that we're going to be making a lower high. This is very similar to, I think I shared this with you guys. I think these moves are very similar setups. You're going to see like a lower high here, probably going to see a lower high here. And then, then eventually we'll correct. And then wherever we correct to into the 20, 30,000 level and give us an opportunity to buy it down here. Something like that, Anyway. All right. Steve Stelios, if you're here.
Can you show us the bias chart, please? You showed it for split second.
There you go,
I'm not that fast.
No, there you go. So I'll see you guys. I know we have a meeting, a quick meeting in 15 minutes. So I'm going to let you guys do what you have to do with everybody else. Thanks, everybody. Have a great Monday, and I will see you on the daily roundup in just a couple hours.
Thank you, Blake.
Thank you.
Thanks.
Senor Steve, you're here. Okay. So we're seeing a little bit of, on quiet days, markets tend to grind. So we're going a little bit higher. Cryptos are leading the way. But like Blake said, they seem to be in a channel. We need to see that previous high to get taken out in Bitcoin before we say that this is, the start of a new run. FX is not doing that much. Norway is still underperforming. Metals are trying to get higher, but they can't really. I think it's going to be a grind today. What are yields doing? Marginally higher. So basically nothing apart from cryptos, right? You see anything else?
Yeah.
And oil, obviously, we're talking about oil and on face.
Yeah.
That's a beast.
Quite a few things. Crude oil, yes, indeed, it has now reached the 1.7% extension. Why not on the way to the next objective at 86.45? Now, would I be chasing up here? No, I wouldn't be chasing up here, but that doesn't mean that it's not going to go there before it corrects, right? So people have to be cognizant of that. So yeah, crude oil is one of the big movers today, but it's not the only thing that is moving and matters, or is producing a technical development that's worth noting. We have natural gas that is taking the opposite route. Quite a big move lower today as well. Makes sense. We said that this vertical move higher, might need a deep corrective move lower, and we're going to soon find out how deep that corrective move can be, since we're currently testing the ascending channel trend line support. So, we hold here, good. We break through here, then we can actually get a bigger move towards 4.5, which in my opinion is also going to prove to be a buy the dip move. Yeah, that's about natural gas. Now there are more things that are moving today and more things that matter. One of them is copper. So copper is currently testing as we speak this, in my opinion, corrective moves, trend line resistance, right? I think it's a reliable trend line. It already passes from 3 separate points. The nature of the move is yelling correction to me. The slow overlapping choppy nature of it after a very, very strong uptrend is telling me that this is a correction that is, bound to break higher, most likely sooner rather than later, and sooner might prove to be this week. Now, I don't know if we're going to have the strength and momentum to break through it today, since we're already closing to being 2.5% higher on the day, but I do think the chances are very, very decent doing it soon. Now, I said it before, and I'm going to say it once again. I think the chances that this pullback in equities being corrective are high. In all the indices, so far I see corrective orderly pullbacks, and I'm waiting for a little bit of a confirmation. For example, in the case of the S&P seeing a move above 44.50, to be even more, convinced about this. That obviously has implications for everything else, FX included. So, I can't see the dollar being strong with equities being strong at the same time. Now, it might remain choppy, but strong, it's quite unlikely. So, here's the S&P, here's the NASDAQ, here's the DAX, here is the IWM, for example, right? I look at all of them and, I can't stop thinking that, the chances are that we're breaking higher instead of actually breaking lower. So, that really keeps me away from having any dollar bullish thoughts. Now, we're seeing commodity currencies doing quite well today. Aussie, for example, is 0.8% higher on the day. I'm still short the USD NOK, and I don't really mind at all. I'm in the money, and I'm not worried about it not participating yet. I think it will. Yes, cryptocurrencies are definitely, the highlight of the day once again. The only thing I can say about it is that, if we do get indeed a break higher in equities, so we go back to a full-blown risk-on mood once again, that's a big tailwind for cryptos, right? On the other hand, there is still a chance that we're unfolding some kind of a big corrective move. So it's not a slam dunk that we're going to break to new highs from here, right? As I said, though, equities will play, and the risk on mood in general will play a big role in the market deciding what it wants to do. Now, another asset that is behaving very, very well is platinum, right? We talked about it again on Friday. Platinum did close near the highs of the day. In my opinion, that constitutes a breakout. Today, it's just consolidating its prior gains. Above 1040, in my opinion, we should be looking much, much higher. Palladium is also having a nice reaction. Back tested this 2200 area. Keep in mind that's a big support area, which can now be a big resistance area. So, let's see what happens from there. Having to do with USD yen, if you remember a couple of weeks ago, I talked about the vast majority of yen pairs that they look to me bullish because all of them look to me like they were creating corrective pullbacks, and many of them were at the precipice of breaking higher. We had also talked about this channel in USD yen. After we broke higher and found resistance there, I said that any pullback, as long as it doesn't break down below 110, should be considered a buying opportunity. And, I like the follow through that I'm seeing, and I don't see, just look at the RSI also breaking to overbought territory and above the previous high. So In all honesty, I don't see USD yen having done or doing anything wrong at the moment for me to be looking in the other direction. And of course, that means that I have no reason not to trust this breakout in euro yen, right? In my opinion, a very clean, corrective pullback. I don't have any reason not to trust this breakout in pound yen, right? This triangle, perfect type of corrective price action. I have no reason not to trust that we've started a new move higher in Aussie yen. We had this corrective channel, we broke higher, we came back, we back tested it, and look at us now accelerating through the 200 daily moving average and the 61.8% fib. I have no reason not to trust this breakout in the Kiwi yen. We had this channel, we broke out, we came back, we back tested it, we found resistance again in another channel that shares the previous channel's trendline resistance, this time as support, and has its own trendline resistance. And look at this clean breakout today, slicing through the 61.8. So basically, my advice is don't try to fade yen pairs. I think there are big chances that this move is the real thing, and especially if equities break higher. If equities break higher, I reiterate, they should help the yield move accelerate to the upside as well, in which case that's going to be extra fuel for USD yen and the yen pairs, right? So as Blake said before, we have a meeting, so I have 3 more minutes. But I tried to summarize quite fast all the things I'm looking at. And I'm happy to say that I like that we're seeing some volatility again in FX markets, because with this move in yen, we now have a variety of pairs that seems to be having, a healthy type of volatility and a tradable type of structure, right? And I don't think you should overlook that. I think it's a good opportunity. If you're mainly an FX trader, I think it's a good opportunity you should take advantage of. Now let me see if there is anything else I wanted to talk about that I haven't remembered to do so. No, that was it. So let me see if I can take a couple of your questions briefly.
I don't see any.
Okay, okay, yep. You are right, Stelio. So,
it's okay.
Yeah.
It's cool. We have in 2 minutes we have to be on a meeting, so I think we can leave it at that. Thank you, Steve. Thank you, everybody.
Okay. Cool. So
We'll
have a
see you.
wonderful afternoon, everybody. And don't forget to join Blake in exactly 2.5 hours for the daily roundup. Bye-bye.
Thank you. Bye-bye.